Welcome to the deep dive. Today we're taking a really focused look at Transformers and Rectifiers, India Limited. That's TARIL.
Yep. We've got a stack of their recent reports, financial statements, that kind of thing.
And our mission really is to pull out the key insights. What's going on with this company? How are they performing? And what does it maybe tell us about the wider energy sector?
Exactly. And for you, the learner, the idea is to give you a clear, quick understanding of this major player in India's transformer scene.
Right, without getting bogged down in all the heavy financial jargon.
We'll pull out the important bits, the stuff that really matters, and try to connect it to the bigger industry picture.
Okay, so let's start with the basics. Who is TARIL?
Well, the documents paint them as a pretty significant global manufacturer. They make a whole range of transformers.
Like the ones you see on poles, distribution transformers?
Those, yes, but also big power transformers, furnace transformers, really specialized stuff too.
And what really jumps out from the report is they're the second largest transformer maker in India, based on capacity anyway.
That's a big deal. Significant scale. Their operations are based around Ahmedabad in Gujarat. 3 plants there.
And about 1,200 employees running things.
Roughly, yes. And something they highlight early on are their ISO certifications. ISO 9001 for quality.
Okay, so that's like a stamp of approval for reliable products.
Pretty much. Then 14001 for environmental management shows they're thinking about their footprint. Or 4501, that's occupational health and safety, focus on their people.
Got it. So quality, environment, safety checked boxes.
Yeah.
And their tracker, it mentions installations globally.
Yeah, over 18,000 transformers installed all over the world, including some really high-power ones, 1200 kV class stuff.
Wow. And they've recently moved into renewable energy transformers, too. That seems smart.
Very strategic, definitely. Fits right in with where the world's energy mix is heading.
And this ties into their vision, right, to be a preferred provider.
Exactly. Their stated vision is all about being a top choice for quality transformers, backed by ethical practices and good customer relationships.
And their philosophy, quality first, sustainability, technology.
Yeah, quality first, sustainability and responsibility, and technological advancement. And look, these aren't just buzzwords on paper. We actually see signs of this in what they're doing.
Okay, let's get into that then. The results. The financial year 2024-25 sounds like it was pretty remarkable for them.
It really stands out. They hit their highest ever annual order inflow, 4,504 crores. That's huge.
4,500 crores in orders. What does that signal, really?
Well, it's a massive vote of confidence from the market, isn't it? It shows strong demand, strong credibility for TARIL.
Even with, potential economic headwinds.
Seems like it. The need for power infrastructure, especially in India, it's just so strong. And they're clearly capturing a big piece of that pie.
And then there was the QIP, the Qualified Institutional Placement. Raised 500 crores.
And fast. In just 3 weeks. That really says a lot about investor belief in their strategy and their future.
3 weeks is incredibly quick for that kind of fundraising. For anyone less familiar, a QIP is just a way for listed companies to get capital from big investors quickly.
Right. And that speed, it underscores the confidence. Plus, they've earmarked those funds specifically. For backward integration, we'll come back to that, and organic growth.
Okay, so strategic use of funds. What else stood out financially or operationally?
Their capacity expansion plans, they're putting 150 crores into boosting their manufacturing capability.
Expanding capacity? What kind specifically?
A big chunk, 15,000 MVA, is specifically for inverter duty transformers. Those are key for renewables, solar, wind, integrating them into the grid.
Ah, okay, so directly supporting that renewable energy push.
Exactly. And they're also adding a new bay for mid-voltage transformers, up to 220 kV. And their moving fast phase 1 should start production around May 2025.
And when we talk MVA, megavolt ampere, that's basically just how much power the transformer can handle, right?
Yeah.
Bigger MVA, more power.
You got it. It's the power handling capacity. Higher MVA means it handles more electricity flow.
And operationally. Sounds like they're firing on all cylinders. Record testing in December 2024.
Yeah, highest number of transformers tested, both in total MVA and just the sheer number of units. So they're not just getting orders, they're getting them built and tested efficiently.
Good point. It's not just orders in, it's products out.
And it's not just domestic success either. They landed a significant order from ArcelorMittal Mexico, a big 175 MVA EAF transformer.
So global recognition, too. That validates their quality on an international stage.
Definitely. And it makes their long-term goal, aiming for $1 billion in revenue in the next 3 years, seem, well, ambitious, yes, but perhaps achievable given the momentum.
They also mentioned improving financial health
Right.
through the CPIR model.
Yeah.
Cash, payables, inventory, receivables.
Right. That's all about managing their working capital efficiently, the day-to-day cash flow needed to run the business.
So managing the money coming in, money going out, what they owe, what's owed to them,
Yeah.
keeping it all balanced.
Precisely. If you manage that well, your cash, your payables, inventory levels, and receivables, you keep the business liquid, you can fund growth, avoid cash crunches.
And it seemed to be working. Look at the profit before taxes jump.
Huge jump. From about 5,600 lakhs to nearly 25,000 lakhs. That's a direct result of higher sales and better efficiency, likely helped by that working capital focus.
That's a massive leap in profit. And the report mentions other strong metrics too, right? EBITDA, PAT margins.
Yeah, solid margins, meaning their core operations are profitable. And improved ROCE, return on capital employed. They're getting more bang for their buck, generating more profit from the money invested in the business.
Plus, higher earnings per share, good for investors, and growth in shareholders' funds and reserves. Building a stronger financial base overall.
Absolutely. Beyond the numbers, though, they outline some key strategies. One big one is customer-centric innovation.
Meaning?
Basically developing custom solutions, tailoring transformers to exactly what a specific client needs rather than just off-the-shelf products.
That makes sense. Build stronger relationships, become more of a partner than just a supplier.
Exactly. It builds loyalty, gives them an edge. They're also heavily focused on operational efficiency. We saw that in the testing numbers.
Right.
Plus, robust internal controls, making sure projects get done on time, and using their workforce effectively, really aiming for excellence across the board.
And underpinning all that, it sounds like, is a commitment to good corporate governance, using new tech, innovating products, and developing their people. A pretty rounded strategy.
Seems that way. Now let's pivot a bit to ESG. Environmental, social, governance, it's increasingly important, and TARIL seems engaged.
What are they doing there?
Well, a concrete example is a 1 mil BD rooftop solar plant at one of their units, Mariah. That's expected to offset nearly 1,000 metric tons of CO2 a year.
That's quite significant, a tangible step.
It is. And they also mention designing more energy-efficient transformers generally and using sustainable manufacturing processes. It's not just one thing.
And extending beyond their own walls, too. Something about suppliers.
Yeah, a supplier code of conduct, basically setting expectations for their own suppliers on sustainability and ethics, trying to make the whole chain more responsible.
Okay.
And a big focus on occupational health and safety, too. Proper systems aligned with ISO standards, safety initiatives like an annual safety week, looking after employee well-being.
Good to see. It covers the E and the S of ESG. And speaking of people, what about human capital?
They definitely highlight that,
Right.
recognizing that their employees are crucial. So efforts to attract and keep good people.
Which is tough in competitive industries.
Very. So they're investing in training, development, creating a culture that values performance, recognizes contribution, and is inclusive.
Things like structured training, clear career paths, performance management. It sounds pretty comprehensive.
Yeah, and they mentioned digital transformation, too, trying to build a more modern, agile workplace for the future.
Okay, let's zoom out. The bigger picture. What's the external environment like for a company like TARIL?
Generally pretty favorable, it seems. The IMF is projecting solid GDP growth for India, which usually means more industrial activity, more power demand.
And globally.
Huge infrastructure needs. We're talking trillions of dollars needed by 2040. That points to long-term demand for power equipment, like transformers.
And the elephant in the room, renewables. Massive growth there.
Absolutely explosive growth. The World Energy Outlook suggests renewables could meet almost all new electricity demand globally through 2030.
Which lines up perfectly with TARIL's strategic move into renewable energy transformers.
Exactly. These big trends directly support their strategy. And even things like India expanding its nuclear power capacity. More reactors mean more supporting infrastructure.
Domestically, too, things like government schemes for rural electrification or promoting rooftop solar.
Right. DDGJY, Sabaga, the Surya Ghar scheme, they all drive demand for distribution transformers and related gear.
So the demand side looks strong, but the report also flags some potential headwinds, particularly in the supply chain.
Ah, yes. This is critical. Making transformers needs some very specific materials.
Like what?
Key stuff includes grain-oriented electrical steel, CRGO, it's often called, also copper or sometimes aluminum for the windings, and special insulating oils and papers.
And the challenge is?
The CRGO, that specialized steel. India imports 100% of its transformer-grade steel needs. 100%.
Wow. Completely reliant on imports for a critical material. That sounds risky.
It is. It makes the supply chain vulnerable. Think price swings, geopolitical issues, disruptions at overseas mills. It can all hit costs and timelines.
It's not just the steel, is it? Other components too.
Correct. Things like bushings, tack changers, insulation materials, cooling systems, often these also come from fairly concentrated supply chains. Potential bottlenecks there too.
So managing that supply chain must be a massive focus for them, and the whole industry, really.
Absolutely critical. It needs close collaboration, manufacturers, suppliers, even the end customers to manage inventory, forecast demand better.
And that backward integration strategy you mentioned earlier with the QIP funds, that fits in here.
Exactly. Their investment to get a controlling stake in Triveni Transtech, for instance, that looks like a move to get more control over some part of their component supply, like a car maker buying a tire company, essentially.
Trying to de-risk that external dependency. Okay, what about governance and compliance? How do they stack up there?
Seems pretty robust based on the report. They talk about strong internal controls, regular internal audits.
And the external auditors. Any red flags?
No, crucially, the statutory auditors reported no instances of fraud. That's always a key check.
Good.
They've also appointed secretarial auditors for a 5-year term, showing a long-term commitment to compliance. They follow all the SEBI rules for listed companies in India.
SEBI being the market regulator.
Right. And they have the standard board committees you'd expect. Audit, nomination and remuneration, stakeholder relations, risk management, CSR.
Pretty standard structure for good governance.
Yes. And transparency, too. Even their dividend policy is up on their website. Plus, importantly, they have a formal policy against sexual harassment, the POSH Act requirements, with an internal committee.
Which signals a commitment to a safe workplace.
Right.
Okay, briefly, what about their subsidiaries?
One called Transpairs Limited did well in FY 24-25 sales and profit up significantly. Another, TARIL Infrastructure, saw sales dip but stayed profitable. And as we said, the Triveni Transtech acquisition is key for that backward integration piece.
Right. And finally, the overall opinion from the independent auditors.
Very positive. They concluded the financial statements, both standalone and consolidated, give a true and fair view. That's the key phrase you look for.
No major issues raised, no qualifications.
No qualifications, reservations, or adverse remarks, which is clean bill of health, essentially.
Did they highlight anything specific, though?
They mentioned a couple of key audit matters. One was the recoverability of trade receivables, basically, making sure the money owed by customers is likely to be collected. The other was revenue recognition, ensuring sales are booked correctly.
Are those unusual?
Not at all. Very standard focus areas for auditors, especially with large project-based businesses. But the key thing is the auditors also confirmed that TARIL's internal financial controls are adequate and working effectively.
Okay, so wrapping this all up, our deep dive into TARIL. What are the main takeaways?
Well, it looks like a company that's performing strongly, definitely growing. They're riding waves of demand both in India and internationally.
Especially in that booming renewable energy space.
Exactly. The financials look healthy. Profitability has jumped. They're making strategic investments in capacity and potentially securing their supply chain a bit better.
And they seem committed to sustainability and good governance practices, too.
Yes, but that reliance on imported raw materials, particularly the CRGO steel, that's a big shadow. It's an industry-wide issue, but it's a definite vulnerability for TARIL, too.
Their moves towards backward integration show they know it's a risk, though.
For sure. They're actively trying to mitigate it. It's a positive sign.
So this brings us to a final thought for you, the learner. India has these huge ambitions for infrastructure, for renewables. How vital are companies like TARIL going to be in actually making that happen?
And perhaps more pointedly, what else can they and the industry do? What strategies can they use to really navigate those tricky global supply chain risks in the long run?
Yeah, a complex challenge.
Okay.
This report gives us a really interesting snapshot of a company right at the heart of powering that future.